there is something happening out there, and there is incredible strength for gold. Hi, and welcome to this video. I've got Alan Hibbard with me once again, and Alan has a whole bunch of stuff that he's lined up that I have no idea what he's going to present. So Alan, what have you got for me?
Hey, Mike, I've got a few things on gold. So the price of gold is moving, and I did a little analysis, and I want to share it with you.
Yeah, it certainly is moving. I mean, we are just a breath away from the all-time highs. So, and one of the things that we've shown several times is that once it breaks that we had a triple top, and now we're building a quadruple top. If it breaks to the upside, there should be a big slingshot move coming.
Yes, exactly. So basically, I've been looking at the price of gold lately. I mean, who hasn't, right? But I've got a chart here. The first one I want to show you is basically the price of gold over the last 20 trading days, which is about 1 month.
Okay.
And if we just look at it on its own, it's really not that special. It's down, it's up, it's a V shape. It's not like a rocket ship or anything dramatic. There really isn't anything special here. But I started wondering, as we all do, has this happened before? And can we look at the past to try to predict the future? So I decided to take this 20 trading days and run a correlation test over the entire price history of gold every single day. And see what are the top 5 times of the past where a shape like this has happened, and then what happened immediately afterwards. Okay, so does the question make sense?
Yes, it does. This is the reason that you worked on the book with me, was because of this type of analysis, being able to run a correlation all the way back and get a result. So this is like you're doing a spreadsheet query somehow, right?
Yes, exactly. I'll show you a little bit. And again, for anyone watching who knows that a correlation does not imply causation, I know that too, right? So I don't want to like overemphasize this. It was just a fun analysis I put together, and the results are interesting enough that I wanted to share it with you and the viewers. So here's just a quick snapshot of what the correlation looked like for any Excel nerds out there. I have all the data. You can see on the left column, there's over 13,500 data points. The most recent trading day was Monday this week, November 27th. And basically, yeah, so this is the chart over here, what it looks like. And the formula for the correlation is very simple. It's just, the last 20 trading days correlated with the most recent 20 days for every single day in the past. And you can see that every single day has a correlation there. It goes up and down and all over the place. And the summary, when we look at all 13,000 different correlations and we pick out the largest of them, I chose the largest 6 correlations. It's as high as 90% correlated, about 88, 89, 90% correlated, six different times. And the highest correlation was 0.90. The lowest was negative 0.91. And these are the dates over here in the rightmost column of the last day of the 20 days that are most highly correlated. Okay, so now I want to look at those on a chart of gold and see what it looks like all together. Looks like this. These green, essentially they look like dots, but I really highlighted the 20 days in green. There's one here in 1995. There's 3 here in the mid 2010s, 2016, 2017, 2017. And then there's 2 back to back in August and October of this year. And it looks like one giant smudge. So these are the top 6, 1995, 3 here and 2 here. So before I explain what I think, Mike, what do you think about this?
I think it's interesting. It looks like, the one back in the 90s doesn't appear to. Obviously, gold rose after that. The correlation to the shape of the last 20 days that we've had in trading, and then it rose, but then fell in 2017. So I don't know. show me what you found.
Okay, yeah, exactly. I mean, it's not like there's a smoking gun here. I mean, sometimes
Right.
we present evidence where it's like, wow, that's a smoking gun. This is not
Yeah.
one of those cases. This is just a
Okay.
curiosity. It's just kind of interesting. But I agree, the one in the 90s doesn't really feel relevant. It doesn't seem like, I mean, the price of gold lately hasn't been like a downward decline.
Yeah.
As you can see over here, it's been this triple top or quadruple top, as you mentioned. So that one almost feels irrelevant, which is why I picked 5 others and 6 total. But yeah, even if we go back to the original shape, this V shape, which is normally not something that gold does. It normally has these like rounded bottoms with spiky tops.
Yeah.
But we do see those V's every now and then in like a fractal sense, on a different time scale with a different magnitude, but those V's do show up. And I mean, we've seen this like triple V in the mid 2010s, and now we're seeing another triple V. These are basically inverse head and shoulders patterns.
Yeah.
And we're continuing, and it's so interesting. There was just one in August, there was just one in October, and now we're in November. I mean, they're happening so soon, 3 in a row, and there were basically 3 in a row here. I don't know. We could see another rise up, just like we did.
That's actually what I'm expecting. And here we are on the, we're at November 30 today. So this is the last day of the month. And if they don't get it below 2000 by the end of the day, then there's going to be a close above 2000, and it's a monthly close. We haven't had one of those before. That will be an all-time high, even if the intraday or the daily is not an all-time high. The monthly will be. And so this is, there is something happening out there, and there is incredible strength for gold. So go ahead and finish your analysis here.
Yeah, so that's mostly what I wanted to say about this chart and this analysis. I have a few other things I wanted to share, and I think you and I saw the same tweet, because you just mentioned one of the things I want to share in a little bit. But yeah, when we think about what affects gold prices,
I've been watching the monthly. I do that analysis every so often. I go to stock charts and I just put in, daily, weekly, monthly. So, and every once in a while I take a look at yearly. So, yeah,
definitely. So as we think about, correlation and causation, and what affects the movements in gold, you mentioned if they don't keep the price below 2000, we'll get a record-breaking close. So I was thinking about what have the central bankers of the past said about gold. And so I went and found a quote from Ben Bernanke that's 10 years old. I have a 5-second video I want to play real quick. It's part of a longer video. It's a minute long, but here's what he says about what affects the price of gold.
Nobody really understands gold prices, and I don't pretend to really understand them either.
Nobody really understands gold prices, and I don't claim to understand them either. Wow.
And he didn't. Gold is the canary in the coal mine. It says when there's something wrong with the system that they're trying to constantly manage, when they're trying to manipulate the system, and when they make a mistake, it comes back to haunt us. But you know what? The markets figure that out first. And but gold does tend to almost like store energy and then take these big, huge leaps. So they'll make mistakes. Gold will show a little blip or whatever, but a bunch of mistakes in a row, and then gold will suddenly make a huge move to make up for all of the blunders that the market manipulators have tried to make. But yes, they don't understand gold. Gold is just this, that's the reason Milton Friedman liked it so much, is it's this automatic balancing system that doesn't rely on any human intervention except for the free market, the trillions of transactions taking place. So what do you get from it?
Yeah, exactly. Same thing. And there was another video where Ron Paul asked Ben Bernanke, "Is gold money?"
And he looks like a deer in the headlights for a
second. Yeah, and then he's like, no, it's not. It's an asset, but it's not money.
Right.
So anyways, he doesn't understand the price of gold. But,
well, he also doesn't understand what money is, because money, Aristotle defined the key attributes that something has to have to function as money. It's got to be a medium of exchange, a unit of account, and a store of value. And the US dollar has lost 99% since gold used to be 20 bucks an ounce and now it's 2,000. So in fact, today it is almost exactly 99% loss of value in the dollar compared to gold. And if you look at how much house an ounce of gold purchases, or any stuff, it remains in a consistent range of overvalued and undervalued throughout the centuries, basically. And fiat currencies, they may bounce up and down, but the trend is down to where there is no fiat currency that makes gains against gold over the long run.
Exactly. And to your point, if we close today, or really any day, at $2,067, that would be an exact 99% loss in the value of a dollar, since the price was pegged. So interesting.
Right.
So moving along, I just wanted to stick on that theme of correlation and causation. Like, what does cause the price of gold to move?
Hi, I just wanted to take a moment and thank you for subscribing and mention that if you'd like to help our channel, please consider my company, GoldSilver.com, the next time you buy precious metals. We're one of the most trusted names in the industry. Our prices are sharp, delivery is fast, and we have an insiders program where you find out exactly what I'm doing with my own investments. Thanks for making GoldSilver.com your dealer, and now back to the video.
What does cause the price of gold to move? We try to explain it in different ways. There's an article here, Yahoo Finance posted from Bloomberg. Gold inches closer to record high as bets for Fed pivot beef up. Kind of a weird title, but basically people are betting that the Federal Reserve will start cutting interest rates next year. Okay, so that's one explanation that we might consider. And so if that's true, we might ask ourselves, what happens when the Federal Reserve stops hiking rates? And well, we have a chart with that title. What happens to gold when the Fed stops hiking rates? This comes from Ronnie Stoufferle at Incrementum. And Lawrence here says, this is the best chart from Ronnie's recent speech. Gold smells it. Get ready. So as you can see here, when the Fed stops hiking rates, this dark blue line, right? These red circles are the times that the Fed stops hiking rates. You can see what happens to gold. I mean, it goes up and up and up every single time. I mean, I would expect it to happen again. What do you think, Mike?
Well, yes, I think so. And then, on top of that, we've got all of these technical indicators, the triple top, the inverse the inverse head and shoulders, and the pan and handle that has been developing since 2011, cup and handle, pan and handle, whatever you want to call it. These things become self-fulfilling. There are traders all over the world looking at these technical indicators, waiting for the confirmation, the trigger, and that would be a close. If it closes 2 or 3% above that 2067, we're off to the races. And so we're very, very close. Now, I was talking with a colleague, Stephen Feldman, just the other day, and he was talking about, some people are worried about buying at a high if they buy right now. But what's going to happen if you buy right now and then gold does do a pullback and pulls back $50 or something? I mean, in 2024, we are destined for much, much higher prices. And the downside risk is very, very minimal. But the upside potential, once we break this resistance, the 2067, once we have confirmation that this new move is underway, I think you're going to see traders all over the world jump on this thing. There's just too many. I mean, the pan and handle, the inverse head and shoulders, the triple top, which is now becoming a quadruple top. And you can see that the energy is building and gold wants to push through it. And the thing is, there's governments all over in the Eastern Hemisphere. There's lots of governments that are trying to accumulate gold, and they want to accumulate it at these lower prices. But this is one of the support mechanisms that you've got, is whenever gold goes down significantly, there are some really big buyers out there. This isn't just a billionaire. it's governments. So I see almost no downside risk. And this is just another indicator that Ronnie has come up with here, the end of rate hikes as another confirming signal. And, this goes out in a tweet and it circulates, and traders pick up on this also. And it's something that's reinforcing those traders that are sitting there chomping at the bit. They are waiting. They got their finger hovering right over the buy button. And they're just waiting for this inverse head and shoulders to complete and break the neckline. So what's your take?
Exactly. Yeah, basically exactly what you said. We saw that inverse head and shoulders that I pointed out in the 2010s. And we see how that finished with a giant move up, like massive. And it looks like we're forming another one. And I would expect the same thing to happen. And, as we look at how the price of gold moves, I mean, in the very short term, it could be manipulated. In the long term, it really can't, because like you said, the pressure just builds up and eventually it pushes through. And the classic movement that we see is these rounded bottoms, spiky tops. And you might be able, they might be able to delay it a little bit, but you can't delay it forever. Eventually, we're going to see another one. It's only a matter of time.
Right. If this is a linear chart. And so if it was logarithmic, it would expand all of the moves that are down toward the bottom of the chart, and they would look just as choppy as the moves up at the top of the chart. It looks much choppier up there. The move that we have seen since 2019 with this triple top is very similar to the pause and pullback, which was also an inverse head and shoulders back in 2008. So put your pointer down at that. That is an inverse head and shoulders right there. And it was a very good inverse head and shoulders. And look at what happened. It didn't just, normally you draw a line across the neckline. So you've got the shoulder, and then you've got the neckline, the inverse head, and another shoulder. And you take that neckline and you flip it upside down like it's a hinge. And that would be the measured move. But look at that. It did like 3 times the measured move. And so we are building that same pattern that we built back in 2008. And as soon as I saw the triple top and how the dip between the second top and the third top was a lower dip, I think this is building an inverse head and shoulders pattern. So I've been showing that for months and months now. And it would be nice, actually, if it built a little bit more of a symmetrical shoulder on it. So if this went longer, but we've already reached a high over just yesterday to where it would now be considered a quadruple top. And so I think gold could break through right away if they are able to get it under control and get it so it closes below 2,000 today at the end of the month. That sort of gives them a little bit more time, but not much. It's not going to make much difference sometime, I believe, in 2024. And so very little downside risk, but there is a big potential of missing out if you're not in the game right now, because it could be happening today. We don't know.
Exactly. And that leads me to this.
Uh-huh.
Now would be a good time to point out that never in the recorded history of mankind has spot gold finished a calendar month above $2,000 per ounce. Today is the end of the calendar month. We very well could break this record and close above $2,000 an ounce. That'd be a record that we'd break through.
Yes. Yeah, absolutely. So, and if that just shows you if you take a look at 1980, January 1980, when gold hit 873 intraday, 850 on the close. But you look at the monthly, it's only like a $600 high. It's not 873. That's the reason it sort of drives me crazy when other analysts, when they're looking at long-term stuff, they don't use daily, or at least put in, in that cell in the spreadsheet that they're generating their charts from, the highest highs and the lowest lows in the chart, so that you actually get the range of what gold is really doing. Because all of the monthly charts, a tip for the viewers out there, when you're looking at a chart of gold and it includes a 70s bull market, go back to your last chart there with if that spike in 1980 is higher, significantly higher, like it is on this chart, than the spike in 1981, you're probably looking at a daily prices instead of monthly. If it's equal, or if the spike in January is just slightly less than the spike in 1981, if it's about equal, then you're looking at a monthly. So just to so that everybody can sort of get a handle on that. And so, we're living through some very exciting times right now, and today could be a historic day.
It could be. Absolutely. Do you have your Speedo, Mike, and your body oil? Get ready. They're printing trillions of dollars.
The American economy.
Here it comes. Get ready, Mike.
Yeah, right. Yeah, this, everybody needs to remember that gold and silver are money measured in a fiat currency. When you print more of that fiat currency, eventually the price of the money measured in that fiat currency must rise. And typically these moves, if you look at how much stuff the money buys you after one of these accountings, which gold has done for thousands of years. Gold has been not thousands of years of fiat currency, but for several hundred years. When it comes to measuring fiat currency, gold does a periodic accounting of that. It brings fiat currency to account. And when it does, there is usually a large move in absolute purchasing power. How much real estate does it buy? How much oil does it buy? How much groceries does it buy? How many shares of how much stocks does it buy? It is in the process of that accounting, and it has been since 2001. And every once in a while, it makes this really spectacular move. And today, it's possible that today is one of those trigger days. But, we'll see.
We will see. Yes. Awesome, Mike. That's all I have for today. So just want to say thanks to you and thanks to the viewers for watching.
Okay. Thanks, Alan. And we'll see all of the viewers next time. Thank you very much for watching. We'll see you then.
Hi, I just wanted to tell you about GoldSilver's 111-ounce silver giveaway, where you can win 111. One 1-ounce silver bar, one 10-ounce silver bar, and one 100-ounce silver bar. So enter today and win.